Hello traders, welcome back to our weekly Forex forecast for the week. We are going to be reviewing the Forex market to identify possible opportunities that we can exploit in the coming week. We are now on the GBPJPY, that is pounds JPY. This is the weekly chart. Now let's look at it and see whether we have opportunities that are waiting for us. As you can see on this chart, it's looking quite robust and interesting. This is what I'm seeing here. I am seeing a sell on this market. Alright, this GBPY, JPY. On this pounds JPY is looking quite like a selling market, and we are going to analyze it and see what we can do for the coming week. There's an interesting candle that has formed here. This is what I called a bearish pin bar. It is formed already. As you can see from here, there was a serious attempt for this candle to break out of these resistant levels, but it failed. That's what I'm talking about. There was an attempt for this candle to break out, but it still failed. So what are we expecting for the coming week? We are looking for a sell in the coming week. Because of this particular candle that's formed here, anywhere you see it, the bears are actually gaining control of the market. And what you can see is that this candle has already broken out of this resistant area, but still fall back. That means it felt the bulls could not hold that position, and they have passed on that position to the bears. So we are looking up to the BS now and see what they can do. We are going to look for sell in the coming week. But now let's look at the shorter time frame and see what the story is like there for us. Okay, let's look at the daily time frame. This is the daily time frame. As you can see, there is a double top here, here, and here. So there's a resistance there, and this bear candle, these two bear candle has broken out of that resistance. So what am I expecting? I'm expecting a retest of that resistance and then continuation downwards. There's one interesting thing that I can notice here. When a resistant area is broken out, it's supposed to form a floor. As the candles returns back to that same region, there should be a floor there that will serve as a support. But in this case, the bear candles broke out of that resistance, meaning that resistant area could not hold the bears. Otherwise, what I would have expected from here is that as soon as this candle broke out of this resistance and ended quite a long distance above it, on this bear candle coming down here, what I expected is that there will form a bearish pattern here and continue the movement upwards. But since they could not do that, it means that the bulls were actually weak. Therefore, what we are looking at now is for the BS to regain control and continue to drive this pair downwards. So I will expect something like a retest of this broken resistance, a retest in this region. There may be a sluggish movement, but there's certainly going to be a retest, then all the way downwards. There are a few occasions where there may not be this retest, and this pair will continue to go down from here. They continue to go down and go down until, you know, it is gone quite a long distance hours until you must have taken your profit on the down level. So what I'm looking at is a situation whereby you plan your selling opportunities and then take your profit in the nearest possible support areas. So if we are going for this, I'll be expecting to take profit in the nearest support areas. So let me look at the 4-hour time frame and see what is happening. So you can see the candle has actually broken out of this zone. This zone corresponds to these resistant areas. There's a resistance here. There's a resistance in this region, but the candle has broken out of that region, and I'm expecting a form of retest. A form of retest in that region. Any retesting of this region, then downwards. But there's a possibility that after a sluggish movement here, the candle may not go all the way up to retest. It may just continue downwards. So as a trader, you'll be looking out for any opportunity to enter on this retest. And if the candles fail to move up, and there's a better bearish pattern forms here, you can place your trade and continue the trade without waiting for retest, and see make your gains. Then if you play the retest, just be confident and don't panic. Let's say you place a trade here and the candle starts to go up, you don't need to panic at all. Just expect that on a retest around this zone, the pair is going to continue downwards. So that is it. Be confident as you trade, and we pray that the week is going to be a profitable week for you. All right. Moving on, we are going to EURUSD on weekly charts. So this is EURUSD on a weekly chart. Let's analyze it and see the opportunities that are there for us. All right. This is the weekly chart. As you can see on the weekly chart, there was a attempt to break out of this key resistance area. This place has been a key resistance area in the past. As you can see, the resistance was here. The resistance was here too. Resistance and resistance. But at this level, you would have thought that the bear has broken out of that particular resistance, but it failed. Look at it, it broke out. We would expect it to continue to move up, but immediately after breaking out, it came down again heavily. So this is a weekly chart. Each bar you see here represents 1 full week, and at this point again, there was an attempt to go back to that region again, but a bearish pattern was formed and the pair still went down. So historically, we are seeing a situation where the EURUSD is not able to break out of this resistance area. So the pair has gone back to that resistance zone and couldn't continue. Then it reversed and began to go down. So we expect it to continue to go down and down. But how are we going to plan our strategy in order to make maximum profit from this pair? So that is what we are going to do now. All right, let me look at the lower time frame and see what we've got there. So this is the lower time frame. Let's go to the daily time frame. As you can see on the daily time frame, is actually looking quite interesting. So what will I expect for the daily time frame? I will expect some sort of pullback, then after which the pair will continue to go down. I expect the pair to actually retest this support zone, this support area. I expect it to retest it, but let me see how we are going to trade it and then make our gain on the sell side. So let me see. All right, I think that is interesting. So looking at this chart properly, I will expect a retest that will go to this line, then I'll continue. Something like this. That's what I'm looking at. So I expect something like this. It will move up and retest the area of this line, this horizontal line, then it will continue the movement downwards. So if we are placing any trade around this zone, we should be making our take profit level to fall around this area, this zone. So that's what we are expecting for the Euro USD for the coming week. So let me still look at the lower time frame still. This is the 4-hour chart. This is the 4 hours chart, and it's still looking quite interesting. So I will expect on a 4-hour chart for the pair to make an attempt to move backwards. I will expect a retracement back to this line. As you can see, the pair has already begun to show signs that it's going to retrace back. Then after that, this is what we are expecting to see, and we believe, God being our side, we are going to get all the gains that we expect. All right. Moving on to the pound USD. This is the weekly chart on the GBPUSD. And this chart is looking very interesting. There's a trend line that I've put here. If you look properly, you will see the trend line. And you know this is weekly chart, so each candle here represents 1 week of free trading. So from what we are seeing here, this currency is currently on a BM move, and it has broken out of this trend line that I put on the weekly chart. It has broken out of that trend line, and I expect it to move gradually back towards that trend line. But what I'm expecting is just a brief movement, as if it wants to get back to the trend line, then the bearish momentum will pick up again. So that is what I'm expecting. There's a serious resistance in this area. So this candle, this currency, GBPUSD, has broken out of that key resistance area. All of this, so many weeks has passed, and it was not able to break out of this resistant area. But finally, it broke out with these two bearish candles, 2 weeks on a consecutive low, and it broke out. So that shows that the BS are in full gear at the moment. So what are we expecting? We are going to look at the lower time frame to see the opportunity that are there for us. So let's look at the daily chart and see. From the daily chart, I'm expecting the daily chart to move back up, to retrace backwards and meet this candle. A retracement towards this horizontal line, and then back to the downside. That's what I'm seeing on the daily chart. Any retracement, then back to the downside is what I see, and I know that it's going to happen. So prepare to make your trade to the downside. Don't be carried away with all sort of news. Just be confident. By the time you take this trade, you should be aiming to nothing less than 90 pips of profit, and that is good enough. If you are trading that with one lot, you know, it's almost $1,000, but every trader is different, so you will choose the kind of risk you want to take. But I expect you to take just a minimum amount of risk that you can bear or that you can take on each trade. So downwards is our trade for this week on GBPUSD. So we are expecting dollar to still gain some strength against the GBP. So let's go down again, still to the lower time frame. This time around, let's look at the 4-hour time frame and see. Oh, that's great. The 4-hour time frame is also showing interesting, arrangement. So like what I was saying, I expect any form of retracement backwards to the top and then continuation of downward move. So still what I said before, movement towards this region and then downwards. So that's our trade. So look at this interesting move. The pair has broken down all of these horizontal and trend lines that I've put, and then it shows that the BS are actually in full gear, and we're expecting them to continue to gain upper hand in the course of the week. Moving on, we are now on AUDUSD. This is the weekly chart of the AUDUSD, and you can see my chart. I've already made some analysis that I want to share at this moment in time. From the analysis so far, and from what I can see, the AUDUSD has been on a bearish run for 2 consecutive weeks in a row. It has closed with a bearish candle. That shows that in this month or in the past two weeks, that the bear have regained their momentum and they are moving downwards. So this is the week, the penultimate week, and this is the other week, and it is closed with a bearish candle. So that indicates that currently there's a bearish momentum on the play. But does that mean that we are going to trade it on the downside? Are we going to sell? We are here to see, more convincing evidences for us to know whether we are going to play to the downside. But from the look of things, we can play to the downside. Let's still analyze it more and see what is happening. There's a trend line that I've put here. This trend line is at the verge of being broken. The pair is already at that trend line, and I'm expecting it to break the trend line downwards. Now let's look at the lower time frame and see what is happening there. This is the daily time frame of the AUDUSD. You see there is a very strong bearish candle that has broken through this trend line, as you can see. Remember, this candle I've shown you before. It's a candle that indicates a bearish reversal. So an attempt for this currency to move all the way to the upside failed. Now, at the time, this candle was all green, but it begins to wipe out gradually until it ended like a pin bar. So that is a show of strength by the bears. Because if the BS weren't strong at that time, this candle would have ended up like this one here. This one that you see would have ended up like a very bullish, a bar, completely green. But that wasn't to be, as it forms a bearish pin bar. And the consequence of that bearish pin bar is that the next candle that follows also ended very bearish. And that's where we are now. So what we are going to see in the days ahead is that the bearish momentum will continue downwards, to continue all the way down until it reaches these key resistance, these key support areas. So remember, there's a resistance trend line that I have drawn here. The whole of this area is a resistance. Here is a resistance, so that's where I drew this trend line. There is also a support here, that is here, which this pair has broken, and I tend to move back to that support, became a resistance, so the pair went down. And at this moment, this bearish candle, this powerful bearish candle, has broken through that resistance trend line. And what I'm expecting is a retracement backward. Why do I tell that there's going to be a retracement back towards the upside? Why do I feel there should be a retracement? Because you see, this zone is a very strong resistant area. Strong resistant area. Because when the pair went to that region, there was a serious reaction. So that was the time the reversal occurred, and the pair attempted to move to the upside and still experience some obstacles. So now that the pair has broken through, there has been a breakout of that trend line. This trend line you see here, what am I expecting? The pair is currently at a support level, and it's a strong support, as you can see from this angle. This is the support I'm talking about. There's a support here, and this support has been support at several periods of time. There's a support here, so this support is going to hold at least temporarily, and that temporary holding of the support means that at that point the pair will attempt to recover itself and move to the upside. And once it moves to the upside, that will be opportunity for the BS to enter their trade at a discounted level. All right, so that is what I'm expecting. Something akin to this. So that is what I'm expecting. Movement up, recovery, then movement downwards again. So if we have traded this pair around this, anywhere around this area, we're expecting to offload our positions at the nearest key support area, and this is the support area that I'm seeing. All right, so expect a very interesting weeks, interesting days ahead for AUDUSD. The bears are gaining upper hand, and I expect them to continue with the momentum. Moving on, this is USDCAD on a weekly chart, and we are going to analyze it to see the opportunities that are there for us. As you can see, this pair is actually very bullish now at the moment. For several weeks, it has been on a bullish run. Check from here, beginning from this level, it was bullish. It here ended as a pin bar where this reversal began. From there, the books were actually in control. It ended as a pin bar. Then in the weeks that followed that week, it ended on a very strong bullish bar. Then the next other week, it follows with a bullish bar, and it has continued moving up every week that have passed for nearly 2 weeks or more, for more than, nearly 2 months. Every week that has passed has been ending like, on the bullish side. Look at it from here, from this position, all the way to this position, and each candle here represents a week, 1 week of full trading. So several weeks has passed, and it has always ended with a bullish candle. Only one bearish candle sandwiched in between these this place, and the pair still recovered and ended up again in the coming week with a bullish bar. And in the weeks preceding this one, in the very last week before this coming week, in the last week precisely, the bear has ended with a bullish bar, a strong bullish bar. So what we are expecting is that this movement, this strong bullish momentum will continue in the weeks ahead. So that's what we're expecting. But we are not just going to jump in on the buy side without following a specific guidelines. So we are going to look at the pair critically to know the right time that we are going to enter into this trade. Now let's look at what is actually happening and see. So let me try to divide this move from beginning from the last candle that we can see. Let me see the base of this candle. Yeah, most times when when a candle has ended up like this with a kind of a movement downwards and recovering of that movement, that place tends to be a strong support. So let me see. Let's go to the lower time frame and look at it critically. Let's go to the weekly chart. Oh, that is interesting. From the weekly chart, you can see there's been a very strong, bullish momentum for several days. Several days. The momentum has continued to favor the bulls, and this is it again. So I expect any discounting of this move, 50% discount is what I'm expecting. So a 50% retracement will give us a perfect opportunity to enter this trade. So if this pair can pull back a bit, it's going to make it quite interesting. If there will be a pullback, then before continuation, I expect the continuation to continue all the way to the upside. So from what I can see, this position, this point, this region, or this zone appear to be the nearest resistant areas that I can see. This is the nearest resistance zone that I can see. So I will expect the USDCAD to move all the way to capture this zone. So if you are able to enter this trade, I expect to make a very good deal of profit, because the pair will continue to move up, even if it is sluggishly, but it will continue to move up until you reach these key resistance zones. Now let's still look further and see whether there is anything further we can see for this pair. Let's look at the 4-hour time frame. The 4-hour time frame actually looks quite interesting. So you can see any form of 50% discount on the 4 hours chart too will look quite appealing for us to buy. So this trend line has been a resistance and a support in the past, and in the nearest past from the left hand side there was a support here, and that support has been broken out by a very strong bearish candle and then a recovery. So it was a fake breakout, we call it fake out, and the pair has continued to move up ever since then, and is now currently at this zone. So if there is a 50% pullback to the downside and a continuation of the movement towards the upside, that will be better for us. So anything that looks in this manner, a pullback towards this zone and then a recovery, is going to be more favorable for our move. So we as traders, we are always looking for an opportunity to buy low and then sell high. So that is our ultimate aim. We don't just want to buy at this top. If you buy at this top and then this resistance held, well, do you know what is going to happen to your account? So it's not good. I know some people will be tempted to just buy immediately, but when you do that, you are buying the currency so expensive, whereas you can actually wait to buy it cheaper. So why will I buy a currency that has moved for about 8 to 10 candles? 1, 2, 3, 4, 5, 6, 7, more than 7 candles. There is 7 candles, continuous movement to the upside. Why will I buy such a pair? I would rather prefer to buy it at a discount by allowing a retracement or a pullback to the downside. Then I will buy. So it's actually very preferable to buy around this zone and then take your profit. Even if it is sale, that you take your profit, you still make a very good deal. It will still make a very good deal again to be a good bargain. So there is no need buying here, and then if there is a pullback, you will suffer that loss all the way down here. And if the pair fails to recover, then your losses will still continue. That's not good enough. So we expect a pullback, and if we get that pullback, we are going to enter into this trade immediately. But if we fail to get that pullback, sometimes it will be the best decision to actually let go and look for another opportunity elsewhere in another pair. Moving on, we are going to USDCHF. This is the weekly chart of the USDCHF, and we are looking at it now on the screen. Oh, the pair has been very bullish of a recent. From this point here, it has been all the way bullish until the latest candle, which is still bullish. So it has been moving up, and from this we can deduce that it is actually strong. This is several weeks. Every candle you see here is 1 week of full trading, and 1 week of full trading for every candle has shown that this pair is very strong in this period of time. For 1 week, another week, another week, another week, and it continued to move like that, maintaining strong momentum for the bulls. So what we are expecting for this currency is to keep its strength in the coming week, in the weeks ahead. So it's going to retain this trend, having been able to close this week, the last week, having been able to close as a very full bar without any form of bearish sign. So we expect the bulls to continue to show their strength. So let's look at the lower time frame and then see actually what is happening. From the lower time frame, we can see that this pair has hit a resistance level. This is a support area here, been a resistance in the past also, and we are at a resistance zone for this pair. But the pair has been very strong of a recent for a long time now. Over several days and several weeks, it has continued to maintain a very strong bullish pose, and we expect it to continue. We are not going to sell this pair at this moment, even though the candle I'm seeing here would have actually suggested a sell. But if you place a sell there, mind you, it's going to be very temporary. Except if you want to scalp it, you can place a sell trade here and then put your stop loss towards this top and expect this pair to move down, at least touching this horizontal line. By the time that happens, you should be able to have made at least 30 to 40 pips of profit. So but we are looking at the bigger picture, and the bigger picture suggests that there is going to be bullish run. So what we are expecting in the days ahead is a situation whereby this pair will attempt to actually go down. It will go down and then start to pick up momentum back to the upside. So if you traded it on the BSI without being careful, you will see yourself disappointed again at the point where you feel you're making a profit. That's when it's going to turn again and start moving to the upside. That is why we are looking at the bigger picture, and we want to follow the bigger picture. And the bigger picture is suggesting to us that it is a buy. So that is what we are going to do. We are going to go for a buy and then take our profit at the nearest key resistance area. If I'm entering this trade, I will be expecting to take my profit around this area. I'll be expecting to take my profit anywhere around this area, and that is a very good opportunity on the nearest key resistance area. So that's when I'm going to take my profit. So this is the daily chart. Maybe we can see the 4-hour chart. The 4-hour chart, you can see how it looks. That shows you that the green candles are the ones you see all over the place. So there's a strong bullish momentum at the moment. So I expect a slight retracement, then followed by a continuation of the bull run. So if this kind of goes down a bit and give the BS at least 20, 25 or 30 pips, then expect that the bulls are going to recapture their groove and then continue to go all the way until it hit the nearest strong resistance area. And I expect this pair to actually continue to go up and up until it comes to the topmost part of this chart. So let's hope that the coming week will be very profitable for us. That's what we're expecting. The coming week to be better than the previous week, and as a trader you pray to actually improve in your profitability every week by week. All right, moving on, let's go to the USDJPY. So this is the weekly chart, the daily chart on the USDJPY, and the USDJPY is quite strong at the moment. It's quite strong at the moment, and the pair has been going up for a long time now. There has been an up move. So this is the daily candle, and for several days it has gone only up. So what are we expecting for this week? This is a new week for us, and we expect to see beautiful opportunities to trade. So let's go to the weekly chart. Well, this is the weekly chart of the USDJPY. This pair is quite strong, and from the way the chart looks, it's actually very difficult to give a signal on this chart. It is overly extended. You cannot say because it is overly extended, therefore you begin to place a trade to the opposite. No, that is not the way it is done. But we always want to buy cheap and then sell high, and now it is actually very high. This pair is at the highest level it has ever reached. So this is a resistance here, and this is a resistance, and this is a resistance. We can say it has formed a triple top, and when a triple top is formed, that is an indication of a bearish reversal. But one problem we have with this chart at the moment is that it is almost at the all-time high, and it has always been up and up and up, and now it has ended with a very strong bullish bar. Look at it, full bullish bar, very strong one indeed. We call it the elephant bar. So if you compare the weekly chart to the daily chart, you will notice a similar pattern. Look at it. This is the uppermost level it has ever it is at its all-time high, and the pair is not backing down. Look at it is at a resistance here, resistance, and then it's almost taken out the resistance, even though it's facing some difficulties. Are we going to say because it is facing some difficulties, therefore the reversal will be like this? I don't think so. That is why it is actually very difficult to give a signal on this pair at the moment. So if I am to say, I would rather say you skip this pair for this week. By next week, we'll look at it and see actually what has transpired and what opportunities has presented itself. So if we actually know that the pair is very strong at the moment, strongly bullish, but are we going to buy? Are we just going to buy because it is bullish or because it has been on a bull run? I don't think so. So if you look at the weekly charts, it is almost about to take out this triple top, but I don't think it's going to be that easy. But there's an indication because this pair has shown serious momentum to break out, to continue to move to the upside. Possibly this pair beginning from here, this is the weekly chart, by the way. This week, one whole week, it has been moving up. Another week it has moved up. Another week it moves up massively. Another week continue to sustain this up move. Only save this one candle that appeared here, and still yet the pair managed to recover and also take out that candle. Look at it. It has taken out that bearish move all the way to the upside, and now it's at all-time high, contesting the previous resistance. And from my experience, I think it's going to take out this trade up because this pair actually looks very strong at the moment, and for several days has continued to move only but up. So my honest opinion is to stay away from this pair until at least the coming week. Let's see what the occasion that will happen. We don't know what to take any risk that are called for, whereas we have other opportunities elsewhere. So it will be risky to trade, to place a sell trade here because the pair has been very strong. This the daily chart. Let's look at the daily chart now. This is the daily chart, and it's now contesting this trade resistance. And just look at here is the nearest key resistance. This particular region is the nearest key resistance, where the pair has taken out that region and is now trying to form. So how would I even expect something of this nature? Maybe this pair to serve as a floor, having broken out of this nearest resistance. If it can serve as a floor for the next move, maybe it will use this region to rest, after which it will continue. I think that is the nearest possible best trade we can deduce from this move. So if you want to trade, you may place a small lot size after this pair has come down to this level. Then you take your trade from there to the upside. But you have to be careful, just as I told you, that it is within the resistance area. And when you are within a resistance area, anything can happen, and a little news can cause this pair to move massively to the downside, even though it's supposed to go to the upside. So you have to be careful trading a pair that is overly extended, is over what we call it, is overbought. So let me use that word. it is overbought at this moment. So we want the overbought situation to come down a bit, to reduce to some appreciable level before we think of buying. Okay, moving on, it is gold versus USD. That is gold on a weekly chart. Gold versus USD is what we're going to analyze now. So this is good. Gold has been surprising us in the recent past. For 3 weeks in a row, gold has continued to break out to all-time high. First of all, in the other week, 2 weeks that has passed now, gold has broken out to $2,149 per ounce. Thereafter, in the week that followed, gold broke out again to $2,180 per ounce. And in the current week, this week that just passed, gold has broken out again to $2,222 per ounce. So this is good for you. It has continued to surprise the retail traders and professional traders alike. And gold has been quite well supported by a whole lot of events that has been occurring around the world. But now let's look at the chart and see what we have on the chart. So this is the weekly chart of gold. You can see how the weekly chart looks. Gold broke out to all-time high in this past week, and then we are looking at what happened here. There was a spike here, and gold broke out of that spike, moving to all-time high, continue to build its record week by week. So what what are we expecting now? Are we expecting gold to make another record high in the coming week? Most likely that's going to happen, but we are looking for at least a temporary sell on gold, if there will be any. So the setup you are seeing here actually looks like a bearish setup, but mind you, this is gold and is supported by several factors apart from the technical analysis. All right, so from this position, gold has broken out of this spike, this inefficient move here, and that is why we know that gold, there is still more for gold in the upside, and it moved all the way to the upside and then fell back again. So that shows that a strong indication that a strong resistance exists along this region. But that does not mean we are going to begin to sell immediately. I think the best option for gold now is to look for opportunities to be on the buy side. The reason is that the hedge funds, the banks, the money managers, they have continued to pile up on their gold because they know that this period of time where there are geopolitical tensions around the world, where there are events of wars, for example, the Russian war and Ukraine war, Israel versus Hamas war, Taiwan and China tensions. All of these events has continued to support gold and has made the big institutions to begin to think of holding their investments in gold. You understand? So during periods of uncertainties, people tend to convert their money to gold because they believe that gold stands the test of time, and actually it does. It has been used as a reserve, foreign reserve for many countries. Gold is being served as a foreign reserve. So what we are expecting is that the big institutions, the banks, the net worth individuals will continue to pile up on gold, holding their positions on gold, and use any opportunity to offload their positions. So we are not going to be selling because of these situations, because gold is supported by many different factors beyond your immediate control. That is why it is safer to be on the buy side. So we'll be looking for any opportunity to enter gold on the buy side rather than simply selling. Okay, this is the weekly chart. Let's look at what is happening on the daily chart. For the daily chart, any situation that will lead to breaking out of this key support area will make for a good buy. So this way we have this inefficient move, and it corresponds to this strong support area. So we are looking at a situation whereby the pair will move down, a situation whereby it will move down and then find its feet again and then continue to go to the upside. Rather than buying at the current level, we expect it to come down a bit, and then when it comes to this resistant area, then we'll buy at this point, then expecting it to break out again to all-time high, and very likely that is what is going to happen. Okay, so I will be a seller only if this is the first condition. This is my only condition whereby I'll be a seller in this market for gold. So if gold breaks out of this key support area, I'll have more confidence to sell it, assuming there's a bear candle that forms and gold breaks out of this candle and end with a very strong bearish candle. A strong bearish candle that ends like this. I'll be thinking of, selling gold. Then I will expect a slight pullback, except there's a breakout of this resistant level. That is only when I'm going to sell gold. But if you continue to remain in this current position that it is, if it's unable to break out of this support area, maybe you get a candle like this, then the best opportunity is to continue the buy side on gold. All right, so you are going to watch out for the best possible opportunity. And from what I can see, I'm looking at a situation whereby the gold will still come down a bit and then form another base here, by which you will be expected to buy and expect to take your profit at least on the nearest key resistance area, even though I know that gold is going to break out again to the all-time high. So that is it. But if for any reason gold breaks out of this resistance, expect it. If for any reason it breaks out of this resistance with a strong bearish candle, expect gold to continue to move down, until it reaches this key support area. So that is what I'm expecting. So whichever way, we are ready for it. So either it move like this and go like this, unable to break this support. But if it does break the support, expect it to continue to go down until it reaches this nearest resistance down support. All right, so gold is a very tricky pair, and you are expected to trade it with wisdom. First, you have to know that gold has been breaking out for the past 3 weeks. For every week in the past 3 weeks, gold has broken out of the key resistance area, making it to all-time high. First, it broke out to $2,149 per ounce. Thereafter, it broke out again to $2,180 per ounce. And thereafter, again, it broke out to all-time high, $2,222. And the events around the world has kept backing gold, making it to continue to move with a very strong momentum. After the FOMC statement by Jerome Powell on Wednesday, gold broke out again. And as I've already told you before, that both US and other nations around the world, the powerful nations, continue to, cut back on interest rate. And this situation is actually, propelling gold to continue to move higher. So as nations around the world continue cutting interest rate, gold is likely to maintain its bullish momentum. You will begin to see some kind of reversals on gold when nations begin to, increase their interest rates. That's when you begin to see gold, experiencing some kind of slowdowns. But at the moment, they are being helped by nations around the world that believes on cutting an interest rate, and these geopolitical tensions that I've continued to talk about will continue to propel gold, making it to be breaking out to all-time high. So I expect gold to still break out to all-time high in the recent week, in the coming weeks. All right. So that is it for our weekly Forex forecast for this week. If you have found value on this tutorial and on this forecast, please give us a like and give us a thumbs up and subscribe so that you continue to get notification each time we release an update or each time we drop another video of this nature. Thank you so much for watching. See you on the next video.